It's right here.
It is.
I keep forgetting we have this really cool intro thingy, and I see it says live, and then I start talking. And anyway, hi, I'm Bill Fairman, Wendy Sweet, Jonathan Davis. We are Carolina Capital Management. Welcome to the show. Our website is carolinahardmoney.com. If you are a borrower or an investor looking to borrow money, click on the borrower tab. If you are an investor looking for passive returns, new camera angle, then click on the investor tab. Don't forget to like, share, and subscribe to our channel. This is the ugly question segment.
I'll tell you what's ugly is the way we have these computer things set up, and it's like jutting in front of you guys. It looks like you have these strange contraptions. There you go, Jonathan. Look over there.
Yeah. Bill tried to get all fancy.
Yeah, we're all uppity
angles.
now.
Yeah.
Wendy loves change, as you can tell.
I do like change. I just like it to be my change.
Right. She wants to be the instigator.
That's right. That's right.
Excellent.
Speaking of instigation, I have to tell you what happened to me today. Y'all know that I have, well, not everybody else knows, but on Easter morning, we couldn't go to church. So my kids and I were upset about that. And we got to our cars and wrote in poster paint, Jesus lives, he is risen. My son wrote, God is not dead on the back of his truck. And that was Easter morning. And we drove through town honking and beeping and praising God and stuff. It was awesome. And just it took about a week. I thought I'll take it down in about a week. Well, I can't take it down because every time I turn around, somebody's honking or beeping or giving us the thumbs up. And I had a guy stop me in the Walmart parking lot, telling me about his wife having Alzheimer and asking me to pray for him. So we prayed right there in the parking lot. Well, today I'm on the phone with a borrower and pull into the post office, and a woman's knocking on my window. She didn't know I was on the phone. I rolled down the window and she starts crying. Her husband had recently died, and she wanted prayer and was asking God to just take her right now because she missed him so much. And my borrower's listening to all this going on. So I got out of the car and I prayed with her. And while my borrower's on the phone listening to all this, I'm thinking they're either going to hang up because they think I'm weird, or they're going to appreciate it.
That's one or the other.
Very, very, very much. So I'm thrilled about all this happening. And then I turn around and I send an email to my group of mastermind investors. And this mastermind is a faith-based mastermind. And I'm telling them what happened and how I was excited about it and how I feel bad because I have been walking around like marred up in a funk for the last couple of weeks, and I can't really put my finger on it. But when I said funk, Siri misspelled it, and it was the F word. So I cursed at all my friends by accident.
And not even it's the one that you wish you don't say.
That's exactly
it could have been
right.
any of them, but that one.
That's exactly right. So Siri is just foul mouthed.
Or she thinks you are.
That's right. That's right.
Okay, so
that's right. So that's my funny for today.
You're leaving us hanging.
So what happened?
What did the borrower do?
Oh, the borrower. That was a great question because I didn't even think about that. So the borrower said, I have the name Genesis in my company, and people are always stopping me, asking me, because he has Genesis, and then he has one of the verses of Genesis on the bottom of his card. People are always stopping me and asking me the same. And I thought that was kind of cool.
Yeah, a little connection
cool.
there.
Yeah, really nifty. Plus, he's borrowing money. We love that. 2 weeks.
So, today's Thursday. You know what that means.
It's the day before Friday.
We have jobs numbers that come out. So,
oh yeah,
a couple are the new unemployment. What do they call it when you're applying for unemployment benefits for the first time?
Unemployment benefits.
And yes, unemployment benefits.
Yes.
Can you say that again, Bill?
Yeah.
So everyone can get it.
So predicted was 840 something, and I believe it came in at 870 something. So they were pretty close.
Yeah.
The continuing claims are upticked just a little bit, slightly, not by much. And then consumer prices are remaining pretty much the same. But there are some numbers where people are buying stuff. So there's some still pent up demand, which is a good thing. Nationwide, though, I saw an article about mortgage delinquencies. They have climbed to, the serious delinquencies have climbed up to 2.3%, which doesn't sound like much, does it?
So that's a lot of.
Not
But
when
that's a
there's
lot
millions
of,
and millions
that's
of loans.
nationwide mortgage loans.
Yeah.
People are at least 90%.
And
This
what
is
makes
what-
it serious?
90 days.
90 days or more.
Yeah,
Okay.
90 days or more.
So
Okay.
I thought this was kind of funny, though. The CEO of CoreLogic, that's who came out with the numbers on the serious delinquencies. He stated here, forbearance has been an important tool to help many homeowners through the financial stress due to the pandemic.
Hmm.
I'm not sure.
I don't think
agree
he
with that.
understands what a forbearance is.
yeah.
Everyone
Because-
who's seriously delinquent at 3 months or more is probably someone who got a 3-month forbearance and now they owe the 3 months.
Now.
Yeah.
And that's the problem with the forbearance. Most people don't understand, and we keep harping on this, is that when the forbearance is over with, you don't just start over again.
Yeah.
You have to pay all the money that you were forgiven all at once.
Yeah.
Yeah.
So
And they didn't pass anything in legislation saying that you couldn't collect it all right then.
No.
Or that they'd give you something.
you can't do that.
Yeah.
These loans are all securitized. They can't change.
Hmm.
You have to pull them out of securitization, which means you have to buy them back from
Yep.
Wall Street. Then you have to turn around and modify them, and then you have to sell them again now that they're modified. And
Well, you can even
you
sell them as
add-
modified, because if you sell them as modified without a track record pay string,
Yeah.
then they're going to be scratch and dent. You're not going to get any money for them. So then you have to
Yeah.
hold them for at least 6 months
Mhm.
to create a pay string.
yeah, and that's the
yeah.
problem. When you do sell them, they're damaged.
Yeah.
Which means you have to sell them at a discount.
Right.
Well, after
it's
6
not
months,
happening.
you can sell them as reperforming, and reperforming, I mean, is
Back to
Again,
normal.
but most of these lenders aren't balance sheet lenders. They're getting their money from Wall Street anyway. They don't have 6 months to hang on to
Right.
these loans.
That's
Yeah.
exactly right. So what I see here too is that New York is at 6.7%.
You've got the hardest hit, the top three
And Las
hardest hit.
Vegas is
Wow.
5.3.
Well,
So they're the bubble markets anyway.
let's talk about this. What is most of the industries really in Las Vegas, New York, Miami, Fort Lauderdale
Right.
is travel and tourism,
Hmm.
and those are the hardest hit.
That's right.
You
They
know,
are big
you got restaurants
destinations.
in New York, you got
They still-
Broadway, all this. You can't. None of that stuff's open except
Well,
for
they opened up
outside.
25% in the restaurants yesterday. Is
Well,
what I heard.
that's what
25%
yeah, but that didn't
capacity.
start until the 30th
Yeah.
of September.
Because COVID is going to
and do
turn
you
off
think
on the 30th.
you think the rent in Midtown Manhattan is low enough where 25% capacity is going
Yeah.
to keep you in business?
Yeah, I wouldn't want to own real estate in
It's ridiculous.
New York City right now. That's for sure.
Not
Uh,
if
But
I
the rest
was,
of the states,
not if I was relying on income for it.
yeah.
However, there's some good news on the rental side of things. The national rental rate actually went up
Woohoo.
this month by $1,
Yeah.
which is surprising. You would think with the vacancies or people moving in with their parents again,
Yeah.
that the rents
Basement
would be
dwellers.
going down.
Yeah.
All right.
That's good stuff.
Yeah.
That's good stuff. So let's go back to, you talked about the employment and the unemployment. So I'm trying to gather what you're saying, that there were not as many new unemployment claims, or there were
no,
more.
it's actually up slightly from
Okay.
last week.
Okay. And I
but
think that's important
It's
to look at,
still below 1 million.
but it's still
Listen, there's
important to
all-
look at.
Yeah, but there's going to be fits and starts to all this.
And what is it at right now? Like
It's still a good trend.
like 8.7 million. Where is it? Do you know what the number is?
You mean the total?
The national
Yeah.
unemployment.
Yeah.
Oh, the
It was under. It's under 10.
unemployment. Yeah, it's 8 something.
Yeah, I saw a couple of weeks
Those
ago. It was
won't
like
come out until
8.7.
Friday. Though.
Yeah, I saw 8.7 a couple weeks ago. I didn't know if it had changed.
Those numbers come out on Friday.
Okay,
This is the private sector stuff.
But I'll
gotcha.
tell you, everywhere I go, I see now hiring signs everywhere.
Well, it's
everywhere.
a shift. I mean, it's not that everyone's not hiring or everyone's stagnant. I mean, some things are doing well, some things
Right.
are not. I mean, I was on LinkedIn this morning reading an article they wrote about, in 2020, since the pandemic, promotions have been almost non-existent, except for a few sectors, and finance is one of them.
Yeah.
That you can still get a promotion, or that they're seeing promotions being handed. Tourism, no.
Well, I heard
Hospitality,
too,
no.
in the Charlotte area, Wells Fargo just announced, and if I remember correctly, a 20% layoff is up and coming before the end of the year.
For who's this?
Wells Fargo.
Interesting.
Yeah.
Well, they were kind of teetering anyway because of the couple of scandals they had.
Mhm.
They made a poor decision buying. I guess who was it at the time? Wachovia, and Wachovia made a poor decision buying
Countrywide.
First Union
Yeah.
because of the subprime loans and stuff they had on the books that go back a while.
Yeah.
So they've been kind of playing catch up ever since then, and it didn't help that they had employees that were opening up fake accounts. It's going to be hard for them.
Yeah.
Yeah, I remember that.
Yeah,
now.
but it's passed and they've moved forward. I would hope that they would have been able to recover from that. And it's not just Wells Fargo. I think we're going to see that in a lot of the banking ends, because they also have increased their loan loss reserves as well.
Well, they're going
Significantly.
to be hiring a lot of people on the asset management side.
Right.
Special assets and acquisitions.
But-
Yeah.
That's what they like to call it.
They're,
Yeah,
they're, moving, they're
foreclosures.
moving more and more into the online stuff. So, branches are probably going to be fewer and far between.
Yeah, which again will impact the commercial industry.
And listen, that was having a branch in every corner was an expensive endeavor for banks.
Yeah, but it was so
anyway.
convenient. It's
yeah,
so
but-
convenient.
I
So
too-
is this.
Yeah.
I mean, I walk into my local branch of my bank, and I mean, more times than not, when I walk in, I'm the only person there. The only customer there.
Yeah.
It's
Yeah.
like, how long is this going to last?
Yeah. It makes you, it certainly makes you wonder.
Well, that's because when you put your mask on, people are running. They think you're robbing the
You gotta
place.
keep that gun in your pocket.
So I shouldn't use the ski mask? Is that what you're saying?
That's typically frowned upon.
Yeah, just a little bit. Just a little bit.
All right. So, by
you
the
were
way,
at the Ask an Ugly Question session today.
yes. If you have any questions, by the way, we have a little chat piece there on the side. Love to have your questions as well. We're going to start doing a few more case studies in our weekly presentations down the road. I'd like to talk about one real quick before we get into the questions. There's a lot of, we have need for affordable housing. And there's a trend right now of taking hospitality, hotels, for
Mhm.
example.
Mhm.
Typically, they're going to be, your ranch motel style. I'm seeing this a lot in older resident inns, which were all suite type
Right.
hotels anyway.
Mhm.
And they're going to convert those into housing.
Hmm.
We have one right now that we're looking at that was an old school, elementary school or high school or middle school. We don't know exactly what it used to be, other than it was a school. And it's already been converted into housing. So it's already apartments. And we're looking at the deal to finance the stabilization of an existing. So we'll let you know how that goes.
Didn't you say it was like 50% rented or 43%?
43,
Yeah,
yeah.
it's pretty low.
No, it's almost, what, 68 or 70% occupied.
Oh, it is?
Mhm.
Oh, okay.
Yeah, there's only, I think it's like 28% vacancy.
Okay.
It's not that
Well, that's
bad.
better than we thought.
But it's it's one of those cases where you have to come in, fix the management, increase the NOI, and then do upfits on the property.
Yeah, and you have to, before you can charge a little bit more for rent, you have to
You have
make
to
it
do
worth
something.
Yeah.
charging.
Typically, now sometimes you can, if something's poor, like there's situations where you can walk in and the management they've been paying the cable bill and the water for all the residents and
Right.
not dividing that out. Well, that's an instant
Yeah.
increase in value
Yeah.
that you can cut that, get that divided to all the residents, and then that increases your NOI, which then increases the value of the property.
Your net operating income.
Net operating
We
income.
have to assume people don't know
Well,
everything.
and at the same time, it's still affordable housing, and we're not talking about going in there and making it luxury and
No,
kicking
no.
out all the
Mhm.
people that can't afford it. The rents are already only,
370.
yeah, they're under 400.
Mhm.
So, in most cities and towns, it's hard to find anything under $1,000.
Yeah.
Oh,
Sure.
for sure. Yeah.
So they're still going to be in the affordable range, but you still have to get your rents up in order to make it worth your while, right?
Well, yeah. I mean, if you're, again, you're buying it at a certain capitalization rate, and that's what you're going to get it appraised or sell it at, is a capitalization rate. And to increase the value, you either have to be in a market that changes abruptly and the capitalization rate lowers, or you increase the NOI, which then increases the value because you take the NOI divided by the cap rate.
That's right. One of the things I think everybody needs to understand too, if you are going in and rehabbing a house or a multifamily, whether it's a duplex or this, 40 unit apartment complex, there are grants that you can get from the city.
Mm-hmm.
And it's important that you find out what's out there. But I just had one of my collective genius people, Randy Lawrence, sent over $30,000 in checks that he's received to help upfit the property he's working on. So
that's cool.
Yeah. So there's money out there, and when he sent that off, somebody else responded, "Yeah, I'm getting that kind of money too on stuff that I'm rehabbing." So understand that, especially now, there's money out there in the form of grants, not just loans, but in the form of grants that can really help you do even more for the properties.
And by the way, if you're thinking about becoming a real estate investor, this would be a good opportunity for you to bone up on government and the money that's available for
Mhm.
people to fix up properties,
Mhm.
and then hire yourself out as a liaison between the government and the real estate investors to help them get this money.
That's a great
Great
point.
Mm-hmm.
You'll learn more about what they're doing, and you'll be first on their list.
Yeah, we actually have property that we took back 3 years ago, contiguous lots that we're selling, and just got word this morning from the guy we're selling it to that the city has approved his plan to put condos, condos/apartments, on those 4 properties as a big units. And he really, they said it very clearly in the approval letter that because he is setting aside, was it 10% of the units?
It was somewhere around there. I think it was
10,
3 units,
3 total units, but it's 10% of the units because he's setting them aside for affordable housing, that they went ahead and approved it.
Yeah.
With ease. So even though people around them were complaining, storm water and that kind of thing, but that it makes a big difference. If you're out to help out the affordable housing, you will be helped out. There's money to be had.
I don't know how accurate this is. I think a couple months ago, someone told me that there's close to 100,000 people on the wait list for affordable housing in North Carolina. So, I mean, yeah, we need that affordable housing here.
Yeah. No doubt.
So the bottom line is we're going to start showing you more of our deals
Yeah.
in process along the way. I think that'll be helpful to get you an idea of what we do, what other people are out there doing. We'll get you before and after photos,
Right.
give you an idea what the investor ended up making themselves and that type of thing.
Yeah.
Okay? All right. Question number 1. You want to say it or you want me
Sure. What are the primary risks listed from biggest to smallest? How long does it take foreclosure in a judicial and non-judicial states? And what scenario could there be a loss in principal?
All right, so let's do question number 1. What's the primary risk from biggest to smallest?
Biggest is you lose everything.
Yeah. Smallest is you make money. There you have it.
No, I mean,
But reality is somewhere in between.
yeah,
right?
I mean, we all know that, there's inherent risk with every investment.
Mhm.
Whether you're putting your money into a fund, whether you're using your own money to buy a
That's
piece
right.
of property, no matter what you're doing in investing, there is always risk. And it is the job of the person investing to do their due diligence and figure out if the level of risk is agreeable to the level of reward.
That's right. In fact, I've got a great story to share on that.
Excellent.
So back in, gosh, it had to be like in 2006 that this occurred. But there was a lender who loaned money to a borrower, and it was in Gastonia. The house was built, it was finished, it was beautiful. It was the day before put on the market.
Mm-hmm.
And the contractor was checking all the eyelets in the stove to make sure it worked, and he forgot to turn one of them all the way off. It caught on fire, a piece of paper,
Oh, gosh.
burned the house to the ground. This is the day before it closes. Burned the house to the ground. Here's the due diligence that wasn't done, and it was in the appraisal. The house, the lot that the house was on, was too small to rebuild. 2 feet too small to rebuild.
Oh gosh.
So, and it was not grandfathered in. So if a house burns down, everything changes.
Yeah.
If it had burned to where the foundation was still there, like in decent shape, the walls, some of the walls were still up,
Mhm.
they could have put it back up, but it literally was nothing. So
Wow.
that was an $80,000 loss, because now it's a piece of ground and you can't do anything with it.
Well, if they had insurance on it, at least they get
yeah.
paid the value.
Yeah.
But they don't. You can't insure the lot, so they lost the money on the lot.
Right.
And if you can't build on it, what's the lot worth?
That's exactly right. So what had happened is they actually got the loan part paid back, but you know how long that took with getting any interest?
6 years.
No, but it did take 12 months for it to happen to where they finally got
Wow.
their check on it.
Mm.
So that
That's
was kind of nasty.
Yeah. Wow. Yeah. So,
So
that's,
listen,
that's an extreme.
it's hard to judge the biggest risk because it depends on where you're coming from. So this question is it the biggest risk for the borrower? Is it the biggest risk for the lender? I think the biggest risk for the borrower is paying too much for the property on the front end.
Yeah.
Correct. Mhm.
Because as you all know, you make your money on the purchase, right?
Mhm.
On the buy,
Mhm.
not when you sell it.
That's right.
And, from the lender's perspective, the biggest risk is that the borrower walks away.
And you get stuck with the house.
Assuming the lender
it
didn't
happens.
want the
That's
house.
exactly
Yeah.
right.
But you know what? That's rarely the case that they're just going to walk away.
Mhm.
They've usually put a pretty good chunk
From
of
a-
chains in it.
From a lender's perspective, the biggest risk is a change in the market.
Mhm.
And that's why
Which occurred in 07 and 08,
Yeah.
right?
That's why most lenders, especially the private lenders, they prefer not to do ground up construction because it takes too long.
Mhm.
Mhm.
They'd rather do the lipstick on a pig loan.
Right.
Those are hard to
So they
come
can
by.
turn
though.
around
They
quickly.
sure are. They
Mhm.
sure are.
Excuse me. The market now is calling for ground up construction. But you really need, if you're doing ground up construction, I still say you need to stay in the
Affordable.
affordable
Yeah,
range.
not luxury
For your-
ground
Yeah.
up.
your
No.
area. And one of the biggest mistakes I see people make is not paying attention to the highest and best use
Of the
the
property.
property they
Mhm.
purchase. Because what's the old saying? If everything is a nail, then your only tool is a hammer.
Yeah.
And we have so many people that are single family fix and flip people that come to us. I got this lot, I'm going to build a house.
Mhm.
When they could easily put 4 townhomes on there and
Right.
triple their money.
Without changing the zoning or anything like
Yeah,
that.
Right.
it's already
Mhm.
available. They're
Mhm.
just not looking at it. So finding out what the highest and best use of the land is before you start any project.
Yeah. In
Yep.
fact, I was on the phone yesterday with 2 brothers who have a beautiful duplex in like The hospital, you can throw a rock at it. It's literally across the street in downtown Charlotte, right behind Central Piedmont. The location is just intense good, where all the houses around it are selling for $1 million.
Mm-hmm.
But this is situated in such a way that the city of Charlotte wants them to build a higher rise project with condos upstairs and retail on the bottom, which was a great idea before the COVID hit.
Yes.
And it's more expensive to do that. So, and it kind of messes with the parking for them to be able to do that as well. Having enough room. It's only like 1/5 of an acre. It's
Oh
a
my
really
gosh.
tiny
Wow.
lot. Or they have the choice to put condos in, just condos, and letting the bottom floor be the parking area. Now, the city of Charlotte doesn't want them to do it that way because they want the retail, I guess, more taxes
Yeah.
that they're going to get out of it. So they're kind of, what do we do? How are we going to do that? And I wish that I had the answers, but my crystal ball broke too. So, I'm getting them in touch with engineers and other developers who are developing down in that area,
Yeah,
both retail and space for residential stuff. Cause it could go any way.
Yeah. The thing about it is, the city wants that area to be more walkable.
Yep.
Kind of destination stuff.
Mm-hmm, mm-hmm.
The problem is if you're the developer, the safest is always going to be residential.
Yeah, there you go.
And if you're trying to sell these things, you're going to have to sell that retail / restaurant / coffee shop to somebody who eventually will just lease it out to
Right.
a business owner.
They had another great idea that I had never heard this, but I'm sure people do it elsewhere. I thought it was a great idea, is to do the shell as condos, and sell each floor off to a different investor to finish it off. I thought that was a pretty cool idea.
Well, that's a good way to do it.
Yeah, that's
Except they
just
all want to
great
build
out
at
of the
same
box.
time.
Yeah, it
You
was
already have
great.
parking issues.
That's
yeah.
right. But I thought that was great outside of the box thinking on their part. So, but you were talking about highest and best, people making a mistake. I mean, I am like number one at that, the highest and best. I bought a property that back in, the pre 2007 off of Park Road in Charlotte, which was just exploding all the places around it. And everybody around me was taking the houses, the little houses, and basically blowing them up into, 3,000 and 4,000 square foot houses.
Big
I
mansions.
decided that because I'm cheap, I was just going to rehab the one I had. So we rehabbed the one we had, and the person that bought it from me, and I made money off of it, but the person that bought it from me tore it down and blew it up into a big house. So,
Yep.
so that's a good story. Don't do what I did. But
Do what I say, none of that.
yeah, I was being cheap instead of doing what the highest and best was for that particular property.
Oh yeah.
So that was pretty smart.
So, how long does it take to do a foreclosure?
And judicial versus
Forever.
non-judicial.
It takes forever. So let's talk about the
So,
difference
here's
between
the-
judicial and non-judicial. That's
Here's
hard
the
to say.
attorney answer.
It depends.
It depends.
We'll talk about the difference because I think that's important.
Okay, so judicial foreclosure is, we'll
Here
say,
comes
for
the
example,
judge. Here comes the judge.
North Carolina is a non-judicial and South Carolina is a judicial. In South Carolina, you have a mortgage. In North Carolina, you have a deed of trust.
Mm.
When you have a deed of trust, that just means the deed is being held by a trustee.
Mhm.
And
Which is
typically,
the
it's
attorney.
the attorney that closed the loan in the first place. And they're basically just holding it with the lender, saying that if these people fail to pay,
We're going to get them.
we're going to foreclose on this note, or on this note, and that deed will then come to us when the foreclosure is finished.
Right.
Yep.
In a mortgage state,
Or non-judicial.
No, judicial.
judicial state,
Okay.
Judicial.
Okay. Sorry.
the person that buys the house, whether they have a loan on it or not, gets possession of the deed.
Mm.
And what you have to do in those states is that you have to sue to get the deed back.
Mhm.
So the process is a little bit longer in the judicial states than it is the deed of trust states.
Especially now with trying to get court dates and
Oh yeah.
Yeah.
Oh my gosh, it's going to be awful.
Now, lenders prefer non-judicial states because it takes less time.
Mhm. Yeah. What's the typical time frame? Let's say North Carolina, 4 months.
It should be.
Yeah.
Well, I mean, right
It
around 4 to
depends.
6 months is.
It should. I've seen it happen in 4 months.
Yeah.
Yeah.
I mean, again, it depends. There's roadblocks that can be thrown up in front of you.
Well, assuming there's
The borrower can file for Chapter 13,
Mm-hmm.
and that'll hold it out.
Yep.
And then they can turn around at the end of the time. They can turn around and file for 7
Yeah.
and start the process all over again.
That's
Which brings
exactly
up
right.
setting up properties. If you're a lender, make sure that they are set up who you're lending on in SPEs, special purpose
Mhm.
entities, which are also bankruptcy remote entities. So you can basically have one asset in an entity, and it's way easier to move that asset out of bankruptcy.
That's a great point.
Yeah.
That's a great point. So who can do the SPE? Does an attorney have to draw that up for you?
No, so SPE is it's just an LLC or corporation, whatever it is. But the issue, or I guess
And it stands for special
purpose entity, or SPV. Some people say special purpose vehicle.
Mhm.
It's just an entity that holds the asset, and that's all it does. It does nothing else.
So this
But-
would be for the borrower to do.
Yeah, the borrower would have to set it up, but as the lender, you can require that to be a condition of you
Mhm.
lending.
Mhm. I think that's
Nice.
a great idea.
They used to have people that would go ahead and sign the quit claim deed before they give you the money.
Yeah.
Until they found,
I
until the
can tell
judge
you-
ruled that was.
It's not working.
I can tell you that judges will say, no, you can't do that.
Yeah.
Well, because you're assuming
Signing
that they're
under
going to
stress.
fail before you give them the
Yeah.
loan, and then
Yeah.
why would you give them the loan if you think they're going to
That's
fail?
exactly right.
And then they will also say that the only reason they signed it is because they needed the money.
Exactly.
Yeah.
They
They were
signed
under
up.
duress.
Yeah, there you go. Yep.
Yeah.
Now, again, it depends. I've seen foreclosures take as little as 2 months. I've seen them take as long as a year. It just depends.
in North
in
Carolina.
North Carolina.
Yeah.
Yeah.
South Carolina, not so much.
Well, in South Carolina, I mean, it depends. Again, like right now, if you're waiting on court dates, you have to get a sale date. You could be. I mean, it could take up to a year in South Carolina. I mean, it
Yeah.
could take 2 years in South Carolina
Yeah.
if it's contested.
Right.
And then if you go to the Northeast, it's even more so. I mean, I tell the story. I joined a firm. There was a property that we bought the note on that was in foreclosure in Kings County, New York. And then I left about 4 years later, and that property was still in foreclosure in Kings County, New York.
We don't lend in New York.
We do not lend in New York.
We don't play there
Yeah.
at all.
California is difficult to foreclose.
Yeah.
As well.
Yeah. It's because it's crazy land. I'm working on a house right now that's a foreclosure, and we just got,
In what capacity?
well,
As the lender.
yeah, we're the lenders.
Okay.
And we actually were told we have a sale date on 9/15.
Mhm.
So that one moved along pretty quickly.
I forget when we filed. It was before COVID,
It was.
and it got delayed because of COVID.
Yeah.
And that one's in North Carolina,
Yeah.
so that one's
Yeah.
taking a little bit longer than it normally does.
But it's coming.
Mhm.
The sale's coming up, and we should be able to get all of our money back on that one.
I hope.
We're hoping and praying to get all of our
Bring
money
your
back on that
checkbooks.
one.
Bid
That's
on this
right.
house.
It's in downtown Charlotte.
It's great.
Tell all your friends. In fact, it's supposedly rehabbed. And we actually still have rehab money in the account for it, don't we?
I think so.
Yeah.
I don't know how much, but yeah,
Yeah.
we have some.
Yeah, because we never released the last part when they stopped paying. So,
Mhm.
so we'll get a little bit out of that, get it done, hopefully get it sold.
So, yeah, in North Carolina, we had one that lasted over a year, foreclosure. But did that turn out bad for the lender, as in us?
Which one are you
In the
talking
end,
about?
no,
Yeah.
because the borrower, as soon as we got possession of it, came up with the money to
Oh,
buy it
yeah.
out.
Yeah, that was a
Including
beautiful
all the
thing.
All the interest, everything for that whole
Attorney
year.
fees, everything. Yeah, we made him pay everything. That's for sure. That was a good one.
Yeah. So that was kind of odd, but
that was
and unexpected.
that was 3 or 4 years ago,
Yeah.
probably longer than that, even that was. One of the things I think it's important to know too is there's due diligence that you want to do before you get to the sale day. So,
Oh yeah.
so this one today that I'm talking about, I have to know exactly what the loan amount is. What was our loss on it? Like, what's our uncollected interest and points? We want to know what that is.
Late fees. I mean, everything goes into that.
We wanna
Default
know
interest.
Exactly.
Mhm.
Exactly. We want to know what all of that is. And on top of that, luckily I'm a real estate agent, so I can pull comps too, but we want to know exactly what it's worth right now too, because we can kind of measure what interest are we willing to take a loss on, or what points are we willing to take a loss on renewal fees, to get it sold, because we don't want the house, right?
Yeah.
We don't want it back. We'd love to go to the courthouse steps and hand them a key and say, thank you very much.
Mm-hmm.
That's the goal, is that we don't have to take care of it anymore, but we want to figure out what that happy medium is, what we know we can get for it, the most we can get for it, the most somebody will pay for it,
Yeah.
in the shape that it's in. And it has a tenant in it, if I remember correctly too.
I know it did. I'm not sure if they're currently there. But
Yeah. But anyway, it's
when we started foreclosure, they were there.
Yeah.
Yeah.
So you have to do your due diligence. If you're in a foreclosure, you need to do your due diligence on what you really need to get back out of it. And what you can get, what you'd like to get, are two different things.
Mm-hmm.
You got to remember that.
Gotcha. So, and Wendy said running comps is an important thing. So I'll give you all a situation. You foreclose on a house and you rack up all the interest that's due, all the late fees, everything, attorney fees, and you come up with, let's say, $200,000. But you know that property is not worth $200,000.
Right.
But you set the bid price at $200,000. The house does not sell. Now you sell it, and you sell it at a loss of whatever your bid amount would have been. So let's say you sell it for $120,000. Since you set the bid amount at $200,000 and you got it back, that means it sold for $200,000, or reverted back to the lender at $200,000.
Mm-hmm.
So if you had a personal guarantee, you cannot pursue that borrower for a deficiency on the loan, even though you only sold it for $120,000 and you were owed $200,000. So also think about the strategy of setting your bid amount when doing this, so that if you're owed $200,000 but you know the property's only worth $120,000, then I would be careful where you set that, so that if it does sell closer to that $120,000, that if there is a deficiency on the loan, someone else buys that property, and then there's a deficiency, and now you can pursue them,
Right.
if that's a strategy you want to take. I'm not saying,
That's
so
a good point.
you have to think those things through.
Mhm.
Yeah, part of the problem with going after them for deficiency is they're in foreclosure.
Mhm.
They don't have any damn thing anyway.
Well,
So
sometimes
you're going to be,
They better not.
it's going to be a lot of work to get probably not much in return.
Mhm.
So
And that's a lot of energy that you
Yeah.
expend
so
when you can use it for something more positive, right?
Well, and I just remember this. I think it was in Texas. I foreclosed on a property in Texas.
Not
and
us.
I was before I was here. It was separate. And
People are going to say, man, they have a lot of foreclosures.
no. And I set the bid amount at what we were owed. And guess what? We won. We got the property back. And then we sold the property and we lost a ton of money. And we're like, well, now we need to pursue that borrower for a deficiency, because guess what? We lost money on this. You can't, because we won the bid at that amount, and that's what the
Yeah, so that was the
sale price looks
Wow.
like.
Wow. Good point.
Yeah.
Really good
see,
point.
this is how you learn.
That's
Yeah.
right.
Oh yeah, I learned on that one.
Hopefully it's from
Now-
other people's mistakes, right?
Back to this. If you're lending and you're doing private lending, you're typically lending on entities, not individuals. So if you do get before a judge, you're not kicking somebody out of their house. It's a piece of property that's for investment purposes,
That's right.
and typically it's vacant already. So the likelihood that you're going to have activist judge hold it up is pretty low.
Mhm.
So I wouldn't worry too much about that side of things. Wow. We have been rambling on this one question. So let's go to the next one.
Gotcha.
Are we finished?
Sure.
I think we are.
Okay.
I bet they think we are.
If anyone's
I
still
bet they wish
watching.
we were. Would you or any other hard money lender that you know provide funding for a second mortgage to acquire a subject property with a first already in place, I'm assuming?
Subject to property with the first already in
subject
place.
to. All right. Yeah. So, and if so,
No.
what's the deal matrix?
No.
Yeah. There are cases where you could do a second that would make sense. But if it were me, you'd have to be at, 50% loan to value, something like that.
It should be really low. And I'll give you a great example. I'm in one right now with my personal self-directed IRA, helping a friend out that's in a house that was subject to.
Mhm.
And I lent him money, $30,000. Let me tell you how much it is. I lent him $30,000 out of my personal IRA, which brings it up to close to 85%, which I would never do for my company. So why in the heck did I do it for myself? Because he's a friend, and I should have. Get your emotion out of what you're doing, folks. Take it from people who do it. So anyway, now he is in the process of foreclosure, and I'm going to lose all of my money.
Yeah,
I won't get any of it. I won't get any of it. Now, he's saying, "Oh, I'll pay you back no matter what." I know better. He might even be watching. I don't know, but it's you can lose your money on a second mortgage very, very easily. Be so careful.
Friends, relatives, you're
Yeah.
lending money to them. Assume you're not getting it back.
Yeah, it's not lending at that
the-
point.
That's the
That's
only
right.
way
That's
you're going to
exactly
keep
right.
the friendship. Anyway.
Yeah, I do. At least I think I do pretty well at leaving emotion out of it. Yeah, so I refuse to lend to any family members or friends.
Yeah, that's a good way to be. So let's pretend it is at 50% LTV, and you're doing a second that brings it up to say 70%. So what would that look like? What's the exit plan? These are great questions.
Well, again, you're just making sure that there's enough margin in there in case it does go into foreclosure that you've got something. But you're much better off if you're going to do any seconds is to buy a non-performing second on an existing property, because in most cases you're kind of the stone or the dirt in a gear in the process of somebody else taking over the property.
Right.
Although you have no standing essentially.
I had zero.
Yeah, I mean,
But you could turn around and foreclose yourself. The problem is you have to pay the first mortgage off.
Yeah.
So if you're in a low enough LTV and you think it works, then you foreclose.
Yeah.
You take over the first, and then maybe you have some money. I don't know. I don't like seconds.
to answer I think the question. I mean, if it's a subject to, I don't know if you're going to find any company hard money or private lenders that will do this. And when I say company, like it's people like us, like
a non-mom and pop.
not someone who is not just like that's just what they do on the side with a little bit of their own money. That's who you're going to get probably to do something like this.
Yeah.
Somebody like me,
like Wendy,
but not anymore. I'm done.
Yeah.
Think about this
I'm out of
too.
money.
You're
What is it?
lending-
Wendy at CarolinaHardMoney.com. You just reach out to her.
You're lending money to a borrower who doesn't even have control of the first.
That's right.
Legally, if you do a subject to loan, the first mortgage holder can force
on the property.
All loans have a due on sales clause.
Correct.
So if they sell this home to you subject to the current financing and the lender finds out about it, they can call the note due.
Well, unless you call the lender and tell them what you're doing. In this case, the lender knew. I mean, it wasn't a secret. And a lot of that's a great point that you brought up, because a lot of people are very afraid to tell the lender what they're doing.
Right.
Especially if the interest rate is a little bit higher, they're not so excited about making sure the loan's paid off and making a new loan, because any new money that they would be doing would be at a lower interest rate. So if they've got, you know, a 6-7% interest rate, they're not going to be so high on getting it paid off anytime soon, and they're not going to fight you
True.
on it.
Yeah.
But you know, you and I did a subject to for that house in River Hills, and we told the mortgage company exactly what we were doing, why we were paying it. You know, they were excited. Hey, we're taking over this house. We were getting ready to put,
we actually had
you know,
to get
$60,000 into
we
it.
actually had to get 90 days caught up on it too.
Yeah, that's right.
So
We had
they
to
were happy
reinstate
that-
it for them. That's right.
They were happy
Excuse
they
me.
weren't going to have to go through the foreclosure process.
That's right. That's
Mhm.
exactly right. So they were really happy. And in this case where I'm going to lose my money, potentially lose my money, I should say it that way.
Allegedly.
Yeah. Well, you know, we were upfront and honest with them about that too. The LTV was high for them. The lender, in first position, and you know, the interest rate's high. They don't want to give it up. So they were happy to have me come in and lend the money that I did, was getting it reinstated as well. So it's you need to be honest. Just tell them up front what's going on. You'd be surprised at how they'll handle it.
Now, what we would do on a second, or what I guess I see other people do on seconds, like I see a lot of funds that have an ancillary fund, like a mezzanine fund,
Mm-hmm.
that they lend with fund one that is, let's say, first lien, lower risk, and then fund two comes in and fills in a gap and gives them a second that is filled with investors who have more of an appetite for risk, but they also want a higher yield. So we see those things happening where someone will come in and give you a first, but then also give you a second
Yeah.
to get you where you need to go.
Yeah. And that's a safer place to be. If you're in control of
Well,
the
if you're in
first,
control of the first, and yeah, sure.
you know,
I like that scenario.
why not
I
do
mean,
the second.
Yeah, and if we had a first on a piece of property, we don't have a problem adding a second to it because
Mhm.
we're already in first position,
That's right.
assuming there's enough loan to value to work with. So if you have let's say the market has changed and you wanted to do additional work to the property to make it worth even more, then that's something that we would look at.
mhm.
But
Now, the other thing here too, though, they're asking, you know, what is the exit plan? So if you're in second position on a subject to, the only exit plan is a refinance of the total property.
or if you're selling it.
Yeah, or if they're selling it.
Yeah.
That's right.
Yeah.
That's exactly right.
So the exit strategy is both the sale of the property or the refinance of the property and getting paid out, which is not really any different from any other exit
Yeah.
strategy.
Except
Yeah.
that you're the second
You're
hand to be
just praying
filled.
that one of those things take place.
That the property is really valued at what you think it's valued at. That loans are able to be had, you know, in that area too. So there's a lot of things that could go wrong. So it's a scary place to be.
Yeah.
By the way, next week we are going to be in Clearwater Beach, Florida,
Woohoo!
on our Thursday, and we're going to do something a little bit different. We're going to not have two shows on Thursday. We're going to have one long show. And we're going
It's okay. Stop the excitement.
We're,
Wait, I'm in.
we're going there because it's collective genius, and we have some of the smartest real estate
Collection of
investors
geniuses.
in the country
That's right.
in one place.
And they're gonna talk at you.
We're gonna be broadcasting live from the event,
Doing investor tips.
somewhat poolside, and we're gonna have a bunch of the folks come up and give you guys some free advice.
Yeah.
Take it whether you want it or not.
Yeah. And it'll be on everything. Single family, multifamily, commercial, senior
Wholesale,
living,
Yeah,
fix and
wholesaling.
Yeah.
flip. I mean, it runs the gambit.
Yeah.
We have a lot of authors there too.
Yeah.
There's a lot of smart guys in that group.
In
And gals.
case you guys didn't know, we make fix and flip loans here.
Yeah. And new construction.
And commercial.
And we do multi-tenanted commercial stuff as well. If you're interested in borrowing money, please go to carolinahardmoney.com. Click on the borrower tab. We also would
Can
like
lend your money.
investors.
We can take care of your
So,
foreclosures for you.
If you're If you're an accredited investor, we have a fund.
Yes.
You can get that information at the investor tab. You can also get information on being what we call a one-off lender or a fractionalized lender. If you're not accredited, we have room for you as well. We sell loans off out of our portfolio.
And if you don't know if you're accredited, they just changed the rules on it too. Yeah.
Did they? I didn't know that.
Yeah.
You still have the same dollar figures in there, but they have allowed, for example, if you have an education in the financial world, they're allowing you to be accredited. If you
what is an education in the financial world?
CPAs are allowed to be accredited.
Okay. Financial advisors.
Fund
managers.
Fund managers. If, for example, we wanted to invest in somebody else's fund, they wouldn't consider us sophisticated unless we had enough money to invest in somebody else's fund. But now apparently we're sophisticated.
That's right. That's right. So if you're a bank teller, probably not.
Yeah.
Okay, gotcha.
Depends. Yeah.
Unless you're.
What about a real estate agent? No?
Well, they're not.
It's ambiguous, I know.
It has nothing to do with real estate.
Finance.
It has to do with
finance. What they know about finance.
That's why the CPAs are allowed.
Yeah. Most
And
real estate
financial
agents
advisors.
aren't.
Most financial people are poorer than real estate people.
Yeah, you're right.
I just.
Yeah.
All right. Send your cards and letters to Jonathan Davis.
That's why I chose finance. I wanted to be poor.
Okay, so it's been a blast.
We'll
so
see you
don't
in
forget
a
to hang
few
on.
minutes, right?
Don't forget to subscribe, share, like, all that stuff. I think she wants out. All right. See you on the next broadcast.
Thank you.
Record your second mortgages. Record them.
Yeah. Good point.